On Business Incorporated today. Moodys cuts Ethiopia's credit rating for the second time. A unit of ExxonMobil Corporation in Chad has been shot in production after its facilities were attacked. Senegal to get €100 million to enhance electricity supply. Hello and welcome to the program. I'm Ini John Mekwa. As usual, we start off with major equities in Africa, where negative sentiment mostly trailed intraday activities. Nigeria's NGX market traded in the positive, though, up 0.59%, almost 6%. And on the flip side, South Africa's GSA index declined by almost 0.8%. It was a similar picture in Egypt as the EGX 30 contracted by 0.56%. And the Nairobi Stock Exchange closed Wednesday's session negative as well. In the Middle East, investor sentiments were largely bullish as intraday for major exchanges, except for Abu Dhabi Index, which traded with bearish sentiment. The Abu Dhabi Benchmark Performance Index was slightly lower by 0.15%, while Dubai's main index climbed by more than 1%. Elsewhere in the region, Saudi Arabia and Qatar indexes rose 0.07%. and 0.13% each at intraday. Well, let's go to the UK now. Talking about prices, especially that of Unilever, some of its brands' prices have been hiked. Well, we'll have details as we have Juliana joining us from our London studios. Hello, Juliana. Good afternoon. Good to speak with you again.
Yes, always lovely to speak to you, Annie. Good afternoon.
Good afternoon. So Unilever has hiked the price of some of its brands as the company warns of higher inflation next year. This will certainly affect many homes as they have their products in a lot of homes.
Yeah, they do. Unilever is a parent company to several brands that are popular with families here in the UK, from Cornetto's ice cream to Hellmann's mayonnaise. And they've just released a trading update showing that profits are doing particularly well in some regions. But because of supply shortages, they've said that they're going to be hiking prices by 4.5%. We've been discussing over the past couple of months just how much it's costing for commodities, edible oil, packaging products, since the kind of bottleneck that started during the pandemic. And it is trickling down to consumers. And Unilever is one of the first big firms to say that this is what they're going to do. So, yeah, pretty shocking update by Unilever, but that's the decision that the bosses have made.
And is this affecting their share price or the market movement?
Yeah, well, surprise, surprise, Innie, their shares are up 3%. I think shareholders are pretty happy that these rising costs aren't going to affect their dividends, but it will affect consumers. So their shares were up by about 3%. However, shares in Unilever are down about 35% year to date. The FTSE has also been in the red all day. It's been starting off in the red pretty much all week. And at intraday today, it's down 0.27%. The FTSE 100 is also down by 0.36%, and the FTSE 250 slightly up. That's the domestic market, up by 0.07%. In the currencies market, the British pound is down on the US dollar by 0.22%, down on the euro by 0.10%, and also down on the Japanese yen by 0.47%.
And there's a research showing major tax evasion avoidance schemes have cost the government an estimated £127 billion in lost revenues. Now, what's the reality of this research?
Well, yeah, this is pretty much a German story, kind of following on from what was exposed in the Pandora Papers, though it isn't linked to the Pandora Papers. This research has been conducted by the University of Mannheim in partnership with a German not-for-profit firm called Corrective. And they've teamed up with journalists from all over the world, really, to just kind of have a look at some of the shady goings on in the underworld where it comes to offshore properties and share prices and how people are moving their money. And they have come up with this pretty humongous figure, just showing how much it's costing the government and therefore the taxpayer when it comes to these schemes. Now, these are the kind of stories that governments say they want, but kind of avoid when it comes to trying to put down some legislation, such as how do you avoid or kind of call out these tax avoidance schemes. Britain has always been dubbed a kind of a destination of choice for anybody who wants to hide their money in expensive properties in W1. So we'll just have to wait and see what the government have to say. However, if you remember, Innie, the Pandora Papers, which really, embarrassed quite a few faces, not just here, but also in Nigeria. The story's already over, isn't it? So I don't think this German report is going to have much legs, I'm afraid.
Well, like you noted, because a lot of reactions came with the Pandora, and now we're not hearing much about it. Well, anyway, ours is to follow the story, and that we will do. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
So let's move to Europe now, where stocks retreated slightly as concerns about the Chinese property sector returned to the fore, while investors also monitored a lot of corporate earnings. So we have Christy joining us from Frankfurt now to tell us reaction to some of this and more. Hello, Christy. Good afternoon.
Hello.
So earnings reports for several European blue chip heavyweights are out today. What kind of results are we seeing?
Right, well, we already heard a bit about the British market, which is, of course, debatably still part of here in Europe with Unilever. We heard those figures a few minutes ago. So we want to take a look more back into the European Union, talk about companies in France for a moment. We saw better than expected results for the luxury goods company Hermès, who are the maker of the famous Birkin bag. We also saw better than expected performance for the French liquor company Pernod Ricard. So some positive news there. On the more negative side, we saw, for example, out of Sweden, the car manufacturer Volvo underperforming. They complained of the ongoing microchip shortage, saying that this has hurt their production of their trucks. And we also saw a few other electronics companies based here in Europe also underperforming due to this same issue with the chip shortage. And then if we want to turn and come back here to Germany for a moment, we have the software company Darling, SAP, here. That Germany, as a more kind of traditionally industrial company, always loves to tout as their digital darling. Also overperforming or performing better than expected according to their third quarter earnings. So and they were rewarded with their stocks going up 1.5% today on that news.
So what role is the climbing price of consumer goods playing in these results?
Yeah, that's a great question, and I think we also covered that a little bit a moment ago. Again, we were talking about Unilever because they were very vocal about that today, about how that's playing into their results. We also heard it a bit yesterday with the results from Nestle as well. Yes, basically these consumer goods and retail companies are being really squeezed by the high cost of raw materials, and what we're seeing now, particularly with these earnings reports, is these very strong brands coming out saying that they did, in fact, pass on these higher costs to consumers in the third quarters, and this is one of the reasons for their high sales performance. Going back to the Unilever example for a moment, their sales volume was actually down 1% for the third quarter, if that gives you a good example of what's actually going on here. So some companies have said they do want to try to increase production to relieve some of this price pressure for consumers, but with supply chains still trying to sort themselves out, and basically more and more companies becoming comfortable with passing those price hikes on to consumers, I think that we can expect to be paying a bit more for our daily products in the short and maybe medium term.
And the issue of rising coronavirus infections and some European countries reinstituting lockdown, this would certainly have adverse effects on businesses.
Yes, that's right. So a bit of what's going on here in Europe right now. We are actually seeing rising infections, particularly in countries in the eastern part of the bloc. Their vaccination rates are lower relative to the West. Yeah, we're seeing spikes in countries like Latvia, for example, Bulgaria, Romania, Poland, all sort of similar landscapes in terms of infections. And now Latvia yesterday was the first country in the bloc to come out and say they're going to reinstitute some of the lockdown measures that many countries here reached for over the last 18 months of the pandemic. They said they will be closing shops and bars for the next 4 weeks to try to slow the rate of infection, to keep their healthcare system from becoming overwhelmed. Now, if we see similar trends developing in other countries, we could be seeing further lockdowns there. And this is, of course, bad news, not only for these businesses, which are forced to close for the next 4 weeks, but if we see the matters getting worse, we could see a spillover into other industries. And then we could be seeing further complications of supply chain issues. And as we both know, the global economy is still struggling to sort itself out on that level from the lockdowns we saw earlier this year and last year. So going into further lockdowns, while it might help slow infections, certainly would not be very good for the economy.
Obviously not. We do not hope to see that. Thank you so much, Christine. Enjoy the rest of your day.
You too.
So let's go to Asia Pacific now, where stocks were mixed as investors monitored shares of developer China Evergrande Group in Hong Kong. Evergrande shares dropped 12.88%, returning to trade on Thursday after a halt that lasted more than 2 weeks. In Japan, the Nikkei 225 led losses among the region's market as it slipped 1.87% to close, while the Topix index fell 1.32%. South Korea's Kospi edged 0.19% lower, closing at over 3,000 points. Australia's stocks were little change as S&P AX 200 closed largely flat. In the United States, stock futures declined in early trading after the blue chip Dow Jones Industrial Average retook its record high amid solid corporate earnings. Dow futures fell 86 points. S&P 500 futures and Nasdaq 100 futures both traded in mildly negative territory. The 30 stock average jumped about 150 points to hit an intraday record on Wednesday, surpassing its peak from mid-August. The S&P climbed 0.4% for a 6 straight positive days, sitting just 0.2% below its all-time high. However, the tech-heavy Nasdaq Composite closed Wednesday's session slightly lower. Investors have been monitoring the third quarter earnings season to assess profit growth, as well as signs of cost pressures and supply chain disruptions. On the oil space now, prices hit a 3-year high above $86 a barrel today, driven by tight supply and a global energy crunch. Although prices eased as some investors took profit on signs the rally is looking overstretched. Brent crude rose as high as $86.10, the highest since October 2018, but was later down 1.15%. While U.S. West Texas Intermediate crude fell 0.84% to $82.72. Oil came under pressure from a drop in coal and natural gas prices in China. Coal fell 11% today, extending losses this week since Beijing signaled it might intervene to cool the market. Meanwhile, some analysts are calling for oil to rally even more as OPEC Plus is likely to stick to its plan for gradual output increases, while demand is expected to reach pre-pandemic levels. In the metals market now, gold prices inched up earlier today, extending gains into a third session as a softer dollar made the metal cheaper for buyers holding other currencies. Spot gold rose 0.2%, while U.S. gold futures were a little changed. Spot silver rose 0.3% to $24.33 an ounce, while platinum gained 0.1% and palladium fell 0.3%. We'll take a break now. When we get back, updates from the commodities market and, of course, more news from the African continent. To stay with us is Business Incorporated on Channels Television. You're welcome back. Well, magnesium is an essential raw material used in the production of aluminum sheets and billet, and it has no substitute. Any shortage in the supply of magnesium could trigger a shortage supply of aluminum, which could affect the production of cars as well as electronics. Now, what is going on in this space? Magnesium is about 75% higher in the last 1 month when you talk about the price. How is this affecting production of commodities? How is it affecting Nigeria and, of course, other countries? That's the conversation we're having next, or with FDC. And we have, from FDC, we have Oshode Kalumi joining us for that conversation. Good to have you, Oshode Kalumi.
Thanks for having me. Good to see your face again,
Cool.
Nini.
So the stockpile of this commodity is almost dried up in European countries like Germany and even Canada. In North America, the price rose 75% in the last 1 month. Now, can this be connected to, the issue of supply shortages, which is going on in the European countries and the UK?
Yes, like you rightly said, magnesium is actually an important industrial input used in the production of aluminum alloy. And as we know, aluminum alloy is actually used for production of cars, and it's used to produce so many parts we have, from the gearboxes even to the fuel tank covers and even the seat, the seat in the car, and etc. And we've seen that there have been a supply shortage in this raw material globally, particularly to European countries who depend largely on imported magnesium into their economy. And the question is, why are we seeing this shortage? To put a context, that this can be largely attributed to the prices that we are seeing, energy prices that we are seeing in China, because China is actually the largest producer of these industrial inputs. China, we can say, have what we can call a close to monopoly of this product, because they produce about 85% of magnesium globally. And because of this, we've seen policies within China to eat to meet their energy consumption target, for the rest of the year. So because of that, we've seen policies that stop the production of magnesium, in the country. To give more context to that, for about 50 local producers, out of 50 local producers, 35 were told to shut production for the rest of this year, while 15 that are actually operational are suboptimal. They are producing at 50% of their production capacity. This, of course, will definitely drive in supply shortage of this commodity in the global space. And as we've seen in some European countries, like in Germany, they are heading towards complete depletion of their risk of the stockpile of this commodity. And if that happens, that would actually halt production of vehicles and cars, etc. And that, of course, would affect global output. And what can be done actually is to avoid this, probably to have what I can call a strategic or diplomatic meeting with China to probably up production before the year rounds up, before the close of the year, so that supply can at least meet demand, even in the short term.
All right, and while we're doing that, let's look at Nigeria now as a heavy importer of electronics and cars, and of course, its spare parts. And of course, magnesium is used in the production of this. How has this increase in the price in the last month affected our import bill?
I mean, you would agree with me that in any production process, if the cost of input increases, we expect a corresponding increase in the the cost of output. And then that's the same case as we see in production of vehicles. And as you likely said, Nigeria is a large importer of both foreign use and new vehicles and spare parts, etc. And this would definitely impact on our import bills, and of course the excise duties on vehicles coming into the country. I mean, Nigeria is not capacitated to produce, although we assemble locally, we assemble cars locally, but that cannot even meet up with the demand. I mean, because we don't have the comparative advantage, we don't even have the technical expertise, we don't even have the infrastructural capacity to do all that. So likely we'll still keep importing this product, and of course it will definitely feed into our import bills and then increase it and probably lead to affect the terms of trade in the country. And as we know, the unit cost of cars will increase. Also, another issue is the issue of exchange rate pass-through effect, feeding into the prices of this commodity, which will be reflected. So this is where we are currently as touching the cost of car import to the country.
Okay, so I mean, when you talk about finding an alternative, to this, there's no alternative now, and with the switch to the electric vehicles and all that, doesn't mean we'll still be highly dependent on magnesium?
Looking at how this space is going and development we are seeing so far, as it is now, Nigeria is actually not, as countries produce, we consider what we call comparative advantage, and that will affect the unit cost of production. Looking at it, Nigeria currently does not even have that comparative advantage to produce electronic cars. There are so many things that ought to be done structurally, and we accommodate that. If those issues are not addressed, I mean, we can try to produce as much as we would. We will not be competitive globally, and it will still be cheaper, as it were, to even bring in these vehicles. But if other fundamental issues are addressed, of course, we can increase that. We can start talking about producing electronic vehicles in a larger scale that is actually competitive globally.
Correlation between rising price of imported cars and the declining headline inflation in Nigeria?
Yes, I like that you even touched on that. I'm looking at the headline inflation in Nigeria. It has actually declined for about 6 consecutive months as you look at it. And if you look at the price of imported vehicles, it has actually increased to a tune of about 28% in the last 12 months. This shows that there is a disparity actually. But if you look at the way the CPI, the inflation index, CPI, is actually computed, it's a basket of commodities that are actually measured, and each commodity is actually weight is attached to each commodity based on the importance of this commodity. So if you look at transport, where vehicles, both old and new, foreign used and new vehicles actually captured, is that the weight attached to it is actually 7.5%, which is lower than commodities like, let's say, food inflation. And if you look at the headline inflation that has declined, and see, if we take away food, which is seasonality, from headline inflation, we have the core inflation. Core inflation actually, in the real sense, actually increased. It has not declined for 6 consecutive months like we have seen in headline inflation, which shows that there is still a reflection of what is happening in all these markets, even in the CPI basket, to the largest extent.
All right, sir. Thank you so much, Pelumi Oshode, analyst with Financial Derivatives Company. Thank you for sharing your thoughts with us this afternoon.
Thank you for having me. Thank you.
So moving on now, Moodys has cut Ethiopia's credit rating for the second time. Moodys Investors Service cut Ethiopia's sovereign credit rating for a second time since May, citing a delay in the nation's planned debt restructuring and an escalating civil war. In 2020, the national debt of Ethiopia amounted to around $42.79 billion. And in Chad, a unit of ExxonMobil Corporation has temporarily shut in production after its facilities were attacked over ongoing talks to sell the business to London-based Savannah Energy. Workers have been protesting while in negotiation with the leadership of Esso Exploration and Production Chad Corporation about their remuneration package ahead of the proposed sale. Chad ranks as the 10th largest oil reserve holder among African countries, with 1.5 billion barrels of proven reserves as of 2018 and production of over 140,000 barrels per day last year. Petroleum is Chad's primary source of public revenue, and around 90% of oil production is exported. The International Islamic Trade Finance Corporation has approved €100 million financing to Senegal National Power Company to enhance the production, transmission, and distribution of electricity in the country. The facility is proposed to cover almost 20% of Senegal's financing needs to purchase refined petroleum products, directly impacting the production, transmission, and distribution of electrical energy throughout the country. The operation comes to support the Senegalese government's efforts to ensure a steady availability of electricity and provide the required energy for the development of all economic sectors, are contributing to the SDG 7 affordable energy and SDG 8 decent work and economic growth. The €100 million financing will help meet the growing electricity demand, improve reliability of power supply, reduce losses, and expand access to previously unserved communities. Well, that's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.